This is Scott Bauer on the floor of the CME Group. And what a day here. We saw the market jigsaw back and forth earlier in the morning and then take a steep dive this afternoon. S&P's down over 70, 80 points at one point. End of the day, close to its lows on the day. Volatility has spiked to the highest point that it's been since the big sell-off that we saw back in February. Leading the market lower today, energy, utilities, tech, all leading the market lower. In addition to that, we got the speak from President Trump about interest rates and what the Fed is doing and that he thinks they're too high. That being said, the dollar was selling off today. Oil sold off huge today. And bond interest rates also were down. Bonds were up, interest rates were down today. Yet, we saw the market sell off big time. Now, that being said, because of the sell-off in the dollar and because we saw interest rates back off a little bit, we saw gold actually move higher. Its biggest move that we have seen in over 2 years today. Big move there. S&P dropped well below the 200-day moving average, and the question now becomes, will it stay there? Will we see a quick bounce? What is going to happen next? Now, with the volatility we've seen, with the volume that we've seen, yesterday was an extremely busy day here on the CME for S&P E-mini options. Over 1.5 million options traded yesterday. About 70% of them were puts. And there is a lot of near-term put buyers out there. In fact, yesterday, the volume leaders were, as I look down here, the end of week 2, October 2,800 puts traded about 16,000 contracts. The end of month EW3, October 2,800 puts also traded about 16,000 contracts. And then the October 2375 puts, yes, well below the market, traded about 15,000 puts. 15,000 contracts also. Now, as we've seen the pattern over the last couple weeks, though, there still are December call buyers out there. We've seen that pattern emerge, and that was no different yesterday. The December 3,030 calls traded about 14,000 contracts. With volatility where it is, so elevated right now, the expected move for 1 day now, between now and the end of day tomorrow, that the ES options are predicting is a move of about 45 points. We usually see that, folks, to keep that in perspective, we usually see that over a time frame of about 2 weeks, not 1 day. In fact, the expected move now going out to next Friday, the 19th, is a whopping 85 points. That is what volatility does to the marketplace. It makes premium much more expensive. Now, let's move over to Bitcoin and cryptos. We've been talking over the last week or two about this just major consolidation in Bitcoin, lack of volume, lack of volatility. In the past, when the overall market, when global markets have sold off, Bitcoin and cryptos have been somewhat of a safe haven. Well, not this time. The market, the overall market, is down about 10% over the last couple days, and we see Bitcoin down about 8% over the last 48 hours or so. Today's volume is about 4,000 contracts, much heavier than what we have seen. But again, in the past, when we've seen market sell-offs, we've seen Bitcoin and other cryptos actually rally. That is not the case this time. This is Scott Bauer on the floor of the CME Group.